Over the last couple of weeks, we have been talking about how stablecoins are becoming more interconnected with our financial system than ever before. Today, this is a clear move from the Federal Reserve because, the Federal Reserve is now at that point where they know and they understand that stablecoins are not going to get smaller from this point on. In fact, they are only going to grow more and more and more. So now the Federal Reserve is preparing to adopt and utilize stablecoins in a big way. But it's not just the Federal Reserve. Obviously, yes, the Fed is a huge piece of the puzzle. The biggest thing about all of this is that this has all been accelerated by this current admin. Everything that we have witnessed over the last 8 months already since the new year has given us a story to really read. And that story is telling us that this is all going to end with crypto being the rails of the future. Everything of value will move over these networks. Everything is going to be settled through these networks. Stablecoins are going to become much larger than anything else out there. They're going to be the main bread and butter for the M2 supply. They are already at 1+%, projected to become more than 3+% by 2030. If we're thinking about how fast stablecoins are growing, it's a clear confirmation of how big this entire space will be in the coming years. Now, if we're just looking at stablecoins, $3.5 trillion in monthly transfer volume, up 15+% in the last 30 days, $3.5 trillion. Market cap, over $267 billion. I think that the actual market cap going off of CoinMarketCap is in the high, like $280+ billion range, closing in on $300 billion, which is just crazy to think about. And again, if we're thinking about stablecoins, we go back to the Fed. We go back to the Fed because we've been getting told from the Fed that now is the time to be focused on stablecoins. Going back to February of this year, this is from Christopher J. Waller, Reflections on a Maturing Stablecoin Market. Thank you for inviting me to speak today about stablecoins, an important innovation for the crypto ecosystem with the potential to improve retail and cross-border payments. A little over 3 years ago, I outlined my views on the benefits and risk of stablecoins. I can think of no better place than this conference to discuss the maturing stablecoin market and examine potential challenges that could impede stablecoins from reaching their full potential. So again, when we're thinking about what's happening here, the Fed is realizing that stablecoins are a means of payment, right? They are a means of payment. We need to make sure that they have a clear use case, a clear commercial case to be economically viable, and all of these need to be in place to make sure that stablecoins thrive and become, that big piece of the future that they are destined to be. But it's not just this speech, right? We also have this speech from August 19th, just recently, embracing innovation. These are all, major supervisors and even governors of the Fed. And they're all talking about how we need to make sure that financial services are faster, safer, and cheaper. And digital processes are the way to do this. We need to tap into stablecoins. We need to tap into tokenization. It's crazy that this is coming from the Fed. Like, think about how big this would have been just a couple years ago. It's happening now. Here we have another one from the 20th, Technological Advancements in Payments, again from Christopher J. Waller. Thank you for inviting me to speak today on payments innovation. It is an exciting time to work in payments. While I have always been interested in the topic, I would have never imagined decades ago that payments would generate this amount of enthusiasm, where now some of the coolest jobs in tech are working in this area. The payment system is experiencing what I called a technology-driven revolution, where the latest advances in computing power, data processing, and distributed networks have fueled growth in innovative new payment services. Again, this includes 24/7 instant payments, user-friendly digital wallets, and mobile payment apps, and stablecoins and other digital assets. Again, this is happening now. The Fed is confirming what's happening. And on top of this, it outlines what we've been hearing over the last couple days from players like Goldman Sachs, telling us that the potential market for crypto stablecoins is in the trillions of dollars. What's even crazier about this is we go over here to the latest FOMC minutes show. Fed discussed stablecoins during July meeting. That's right, stablecoins. Payment stablecoins could help improve the efficiency of the payment system. Big shout out to Nate Garashi for this. But yes, this is a part of those FOMC minutes meeting with the Fed, where we are seeing the highlight of the Genius Act, which is huge for, US stablecoins and also just the entire market around stablecoins within the US. But also, it's talking about how payment stablecoins could help improve the efficiency of the payment system. They also observed that such stablecoins could increase the demand for the assets needed to back them, including treasury securities. In addition, participants who comment raised concerns that stablecoins could have broader implications for the banking and financial systems, as well as monetary policy implementation, and thus warranted close attention. Yes, we need to monitor these stablecoins. Yes, we need to make sure that we're focused on these stablecoins and make sure that we have everything in place to adopt them and utilize them, but that's being solved right now. Regulations, these big moves around regulations are all starting to, push us towards that day where we are starting to see stablecoins integrated into the US financial system. Now, the Federal Reserve also just announced the ISO 20022 migration is complete. It's time to start exploring the possibilities. Within this, right, we have here that on July 14th, FRFS adopted the ISO 20022 message format for the Fedwire Fund service in a single-day implementation. This widespread adoption will enable ISO 20022 to truly become a universal messaging language for the industry to help encourage innovation in payment technologies. Now that ISO 20022 is live for the Fedwire Fund service, the next step for the industry is to leverage the standard to create value and modernize payments. This is from the Chief Payments Executive at the Federal Reserve Financial Services. And here we have a few things, right? This is what it allows financial institutions to do now that they've migrated to ISO 20022. Leverage the data. This is definitely big for them. Work together. Again, this is good for, industry names. It could be even, third-party players. Innovate as well. The modernization and richness of the ISO 20022 standard creates an environment ripe for innovation and developing new value-added services. Talk with your technology teams or service providers about how your institution can use payment information in new ways to benefit your customers. Again, when we're thinking about what this does, this allows these big institutional players to adopt and innovate using next generation technology. We're thinking about Ripple. We're thinking about Ripple APIs because we know players like, for an example, we go all the way back to Volante. Volante dates back, going all the way to like 2017 or so. We outlined them back in 2022 and 2023. They have massive amounts of players tied to them. Some of the largest banks out there. They're moving trillions of dollars per day as well. They have that integration with Ripple API, which is it's basically a single integration that allows them to utilize blockchain technology in payment processes, aka XRP and the XRPL. But we also go over here to Fed's Bowman suggests allowing central bank staff to own small amounts of crypto products. The main thing here is stablecoins and digital assets in general. And if we actually go over here to what she said recently, big shout out to Bank XRP for this. Federal Reserve clarifies banks can serve crypto industry. Federal Reserve Governor Michelle Bowman, legal and permissible activities. She also noted banks can't use reputational risk to block crypto clients. Check this out.
As Congress overwhelmingly supported the passage of the Genius Act, these are very, very acceptable activities, and they're, of course, legal because we're working on developing frameworks that will allow for digital assets to exist both inside and outside the banking system in a way that is unquestionably allowable activity.
So what she's basically saying here is that we are about to witness a massive flood into the space from some of the largest banks. Because again, everything that we're seeing about crypto, specifically, let's go back to Gary Gensler, right? The Gensler era. What we saw was obstacles put in place to block banks and block clients from tapping into banks. So now banks have no choice but to tap into or even just give the green light to crypto clients. This is very, very exciting stuff because almost all those old obstacles that were keeping out the big money, keeping out the big adoption from, institutional clients as well, that's all gone now. All of these obstacles are gone. Debanking is no longer a problem. Now, on top of this, let's go over here real quick. So this is Caroline Weinberg. Big shout out to Subjective Views. We have Chief Product and Innovation Officer at BNY Mellon, $55 trillion in assets under custody, mentions Ripple and talks about building better rails. Check this out.
So I'm going to ask Carolyn another question, which is, BNY has just been selected to custody stablecoins. Can you talk a little bit about how that process evolved and what your experience was in the decision making around taking that step.
Sure. So for quite a while, we've been enabling stablecoins, like Circle and others. The announcement, I think, is Ripple, Open Eden recently as well. What we're really focused on is the enablement and the ecosystem. So how do we actually think about this concept? We said there's treasuries underneath. You need bank accounts, you need payments. So all of these things we do to enable the stablecoin. We sort of inside we call it stablecoin in a box because we actually can enable all these things, and we have lots of partners around that do much of the pieces as well. And together, what's important is that this is about better rails, and I think Nathan said it as well. We really, if there's a pain point, if you will, for a client, how can these rails enable that? So from our perspective at BNY, what we're really focusing on is how do we enable the stable coins to actually save our clients money, to create better, cheaper, faster ways, reduction in capital and these efficiencies. So that's one really important thing for our clients. And the second thing is the role we play in this central position. Our vision is that by being the custodian and the enabler and manager in some cases for the treasuries of these stable coins, we can ultimately, in a future state, interoperate between all of them. And that interoperability, imagine a world where you have treasuries in one stable and treasuries in another, all sitting at BNY. It's a book entry in many ways. The question is, how do you have 24/7 treasuries? Or if you have a cash account and a cash account, enabling between inside BNY for the tokens to move 24/7 and the underlyings to move 24/7, that's what we're focused on. So what we're comfortable with is enabling our clients who are stablecoin issuers, who are settlers of transactions. We have 55 trillion in assets in custody. Imagine if all of those wanted to trade on blockchain within the BNY network or outside. That whole system, if you will, can be enabled through BNY. And that's what we're focused on. So hopefully that explains it. But imagine if there are loads of stable coins and everything could just move in ledger within BNY from treasury to treasury to treasury, from one to the next. That's what we're focused on. That's what we're trying to help, and to scale stable coins and then yielding coins, if you will. So Carlos brought up a product that exists that's yielding of stable coin. It's the same investment guidelines as a stable coin, but actually gives yield. So imagine just going back and forth, checking account, savings account, checking account, savings account. Ultimately, we would love to be able to do that for the system, and that's how we're comfortable.
And that's the premise.
And again, like if we're thinking about what these players are telling us, I understand that we get caught up in the day-to-day price action in the space. I understand it, right? I get it. I'm not sitting here saying, hey guys, guess what? Just avoid looking at the chart, avoid looking at the price action for, a couple years. No, I'm not saying that. But, when we hear these individuals talking about what they're planning to do with this technology, what we can do with this technology, and, how they're trying to get to that point, it tells me one thing. More and more people in this space are not aware of what type of flood is going to hit this space. I understand that it sounds like, I'm selling you guys on, a used car or something, but I'm being serious. Like if we think about what's happening here, these are some of the largest players in TradFi saying that, guess what? These technologies are causing a big revolution. We could do so much with this technology. We want to do something with this technology in a big way. By the way, BNY, they just partnered up with Ripple to be like the main custodian for RLUSD. Like if we're thinking about the connections here back to Ripple, we look at what's happening with Ripple, we look at what's happening around Ripple, and we go back to the original days of what Ripple was telling us. Guess what? We are in the early stages of the internet of value becoming a reality. This is where trillions and trillions and trillions of dollars are going to flood into the crypto ecosystem. And it's not even just about making us money, right? It's not even about, pumping the charts. It's about the technology revolution that's happening right now. Changing the way that money moves around the world, changing the way that money works in itself, right? Like this is changing how anything that requires money, it's changing everything about those markets, everything about every single asset class out there. Tokenization itself is going to bring hundreds of trillions of dollars on chain. It's not going to happen overnight. It's not going to happen tomorrow. It's not going to happen next week. It's not going to happen next month, but we are in the beginning stages of this becoming a reality. I think that the proof is there in terms of stablecoins. I think that the proof is there in terms of, tokenized value on chain. I think that the proof is there in terms of the, the names that are here. BlackRock, Franklin Templeton, Wisdom Tree, BNY is telling us about this. Big banks are telling us about, stablecoins. The Fed is telling us about stablecoins. The Fed is upgrading the system using ISO 222 messaging data. Like all of this stuff that's changing around standards, changing around, the traditional system. It's all to adopt and incorporate these new technologies. So we are in the beginning stages of all of this becoming a reality, but it's a very exciting time, especially for those that have been following Ripple, following XRP for so long, because this is the internet of value becoming a reality. So with that being said, I hope that you guys enjoyed this video. If you did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.